Hello everyone, welcome to this week's weekly market view for Monday, the 9th of September 2024 to Friday, the 13th of September 2024. My name is Vishal. Let's get started. All right, so let's start with the Nifty analysis to begin with, and let's start off with the daily chart. So today we can see that the prices did open slightly more negative, and then now there is some kind of a buying that is coming here. 24,800 is the highest put open interest. We are very, very closer to these levels. And we also have some supply zones that have been created now on the smaller time frame. So we'll just quickly go through those key levels of demand first. So let's go to the 125-minute chart. And on the 125-minute chart, which is more or less in line with the daily chart, we have these two levels of demand here. This is the first level of demand, and then just below that we have a second level of demand. And right now, as we can see here, the market has more or less taken a little bit of a support from the lower level and probably trapping all the sellers here and now trying to push to the upside. In case if the market does hold on to this level, we might see a potential upside on the Nifty or a continuation right up to this 25,000 handle first, and then the next target could be potentially 25,200 levels as per the daily and the 125 minutes time frame. Let's move on to the Bank Nifty. And on the Bank Nifty, we are pretty much range bound. Nothing much has developed since then. We are leaning against this fresh supply zone and this level of demand zone. So prices are currently in the middle. We might expect to see this consolidation, taking into consideration that Nifty is also, hit a level of demand. So we might see a little bit of a bounce coming in Bank Nifty. But like I said, again, Bank Nifty is facing this major barrier. It was unable to cross that barrier last time around, which is 51,500. So again, 51,500 remains a very, very big barrier for the Bank Nifty. And unless and until that closes on a closing basis, we may not see a further upside on the Bank Nifty, and we might expect to see a range-bound consolidation that is happening. Let's move on to the Nifty Financial Services now. Let's remove all the tools and let's do the fresh analysis here. So Nifty Financial Services again is more or less behaving like the Bank Nifty right now, taking this support at 23,500. We are still consolidating right now. Finnifty is reacting to this level of supply. And we are kind of range bound now. We might see a little bit of a consolidation to a slightly bullish move to the upside in case if the Nifty starts to react from that 125-minute level of demand. Let's move on to the next index, which is MidCap Select. So let's look at MidCap. So let's remove all the tools here. So MidCap is, like I said, it behaves a little bit more differently than all the other indices. But here we can clearly see that on the MidCap, we have this rally-based drop supply. This is the new level of supply that is formed or that is created here. And the next level of demand is a little bit on the downside, which is sitting here, rally-based rally. So still the demand zone is far away from current market price, and supply zone is also far away from current market price. We might tend to see a little bit of a consolidation to a slightly bullish move in case if the Nifty, Bank Nifty all start reacting from the level of demand. Let's look at Sensex. So Sensex also is taking support at this daily level over here. As you can clearly see that this is a fresh supply level from which prices have reacted now. So this is going to be a key area for Sensex. In fact, there is one more level below this, which might also take a little bit of a support, which is this area, very similar to the Nifty. So on the Sensex, we have not hit the lower level yet, but on the Nifty, yes, we have hit the lower level and we are reacting. So any kind of a move to the downside and then, from this level of demand would indicate a little bit of more bullishness now that we are coming into a level of demand. But we will have to see because a little bit of consolidation and after a move up will indicate that there is accumulation of orders or buying orders that are happening in this or within this level of demand. All right, let's move on to Bankex now. So on Bankex, let's look at this level over here. So we have this drop base rally demand. Prices have not yet come into that level. In fact, prices have taken a little bit of support at this round number 57,000 odd round number over here that we see. So it'll be interesting to see how the market probably shapes up once it hits this area. Again, based on Nifty, Bank Nifty, we are in a level of demand. So again, we expect that Bankex, Sensex, all these other indices also will tend to take support and will slightly start moving again back to the upside. The first barrier on the Bankex will be 58,000 and the next barrier will be 58,500. All right, let's now move on from the indices to the heavyweight. So let's start up with Reliance first. So like I mentioned last time around, Reliance is in a very tight range here now. 2,900 is acting as the closest support, which is having the highest put open interest. And then you have 2,840, 2,800. Our level of demand is far away from current market price, and our level of supply is also currently far away from current market price. So what do we expect from Reliance? We expect Reliance to remain range bound or consolidated for between 3,100 levels to the upside and 2,900. Any break or close below 2,900 on Reliance will indicate more bearishness. Any break above 3,100 on Reliance will indicate more bullishness. However, we have this key level of supply here, so you just got to be careful. Even if 3,100 breaks, a lot of short sellers might get trapped into this 3,150, 3,216 supply level. All right, let's move on to the next heavyweight, which is HDFC Bank. And let's see what HDFC Bank is telling us. So HDFC Bank has been struggling. And in fact, it has just been consolidating in a very tight range here. However, the 1,600 level on HDFC Bank is acting as a very strong support. And like I said, unless and until the 1,600 level breaks to the downside, we are not going to see a very big move to the downside. And in case if the 1,700 level breaks, only then and then we will see a pretty strong move to the upside. So right now, it's very clear and evident that HDFC Bank is also going to remain range bound between 1,700 and 1,600. And more or less, that will also dictate the term on how the Bank Nifty is also going to move, since HDFC Bank is the Bank Nifty Index heavyweight. All right, now let's switch gears from the world of indices to the world of commodities, and let us see what the commodity markets are telling us. So let me load the commodity layout here. Just wait for the charts to load. All right, so let's start with gold to begin with, and let us see what gold is telling us. So gold, like I mentioned, 72,000 key level, struggling over there since a pretty long time. Any break above 72,000 will probably induce more or a bigger push to the upside. But we do have these supply zones on the 240-minute chart, so one needs to be a little careful, because if the price gets into this level of supply, then it's more likely that gold will tend to lead into a sell-off. We have demand zones on the 240-minute chart also around 69,984, two levels below each other. So it'll be interesting to see what happens. The highest open interest on gold right now, the call open interest is showing at 72,000, and that is where gold is actually struggling to cross the 72,000 level. And on the put open interest side, 68,000 is going to be considered as a very strong support for gold. So we will expect gold to be range bound between 72,000 and 68,000, unless and until 72,000 breaks to the upside or 68,000 breaks to the downside. We don't see a massive move in gold. All right, let's move on to the next commodity. We are going to look at silver. So let me just load the silver chart here. Okay, so let's look at the silver chart, and pretty much The silver chart is behaving slightly different to the gold chart. We see this level of demand, drop base rally. Prices just barely touched the level, gave a bounce, again came down. So 80,000 level is acting as a very, very strong support for silver. And to the upside, we see 85,000. So any break above 85,000 will probably push silver towards these areas. First target will be 90,000 and the second target will be 95,000. So at the moment right now, we are expecting to see silver to be slightly range bound with a slightly bullish bias to the upside, first towards 85,000 and then towards 90,000. Let's look at the next commodity, which is going to be crude oil. Now, crude oil has been slightly bearish. So let's remove all the tools here. And we can see some fresh levels of open interest getting created on crude right now. We have this new level of supply. Drop base drop. And then we also have a level above that, which is rally based drop level. And to the downside, we do have this gap level of demand. And there is also a key level of open interest around 5,500 levels. So it will be interesting to see how first price reacts to this 5,500 level. Any break below 5,500 on a closing basis will probably push oil further down towards 5,000 odd levels. But at the moment right now, oil is going to have a tough time breaking to the upside. 6,000, 6,100, 6,200 are going to be extremely strong barriers confluencing with the supply zones for crude. So slightly bearish bias on crude, then bullish. Any retracement to the upside will probably induce more selling in. Let's move on to the next commodity, which is natural gas. Now, natural gas has been a very, very interesting commodity. So let's go to the weekly chart for a moment. And here we can clearly see that natural gas is actually bouncing from a level of weekly demand. It's come here and this is a very, very strong level of weekly demand. And now the one thing that natural gas should ideally be doing is trying itself to push to the upside. And we can see that significant gap up over here, which has already taken place. Now we want to see whether this gap is going to get filled eventually, and then prices will tend to push to the upside. We are coming closer to a potential supply zone. This is a more or less a tested supply zone, also confluencing with a open interest level at around 200. So unless and until 200, 210 breaks on a closing basis, we will not see larger moves on natural gas. And if that happens, then yes, natural gas could move easily towards 224 odd levels. If that does not happen and natural gas starts breaking to the downside, then we have these two levels of demand here, 164.57 to 157. And then we also have this very, very key level, which is this gap level over here on natural gas at 140 odd levels. So it'll be interesting to see now how natural gas behaves, whether it takes that weekly demand and consolidates and starts pushing to the upside towards the higher levels, or whether it consolidates and breaks to the downside by breaking the 180 level first and then moving towards 170 and 160 levels. All right, everyone. So this is it from me for this week. I hope you enjoyed the analysis. If you do like our analysis, do hit the like button and do become a member of Sher Khan Education on YouTube. And do give your valuable comments. Your valuable comments are very, very important to us. And hoping that you have a lovely trading week. See you all next week. Good luck. Bye-bye and take care.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.